Hello everyone, welcome to TSAM Digital. My name is Amy and today I'm joined by Mark Babington, who is the Executive Director of Regulatory Standards at the Financial Reporting Council. So hello Mark, it's great to have you.
Hello Amy.
Amazing. So I think just to get started, because you're from the Financial Reporting Council, would you mind telling us a little bit about your work background and what you've been doing and what the organisation's mission is?
So the Financial Reporting Council is the regulator of the accountancy and audit professions, and also we set the technical standards that underpin their work. But it's a lot more diverse than that. So as well as setting technical standards, we also carry out monitoring work of the way in which companies report and the way in which auditors carry out their work. And then in cases where things go wrong, we also have powers to take enforcement action. So we're quite a sort of broad group of different professionals, some accountants, some auditors, some lawyers, some people with more general experience of business and companies more widely, because on top of that, we also are responsible for setting the UK Corporate Governance Code and the Stewardship Code. So my role in the organisation, my teams deliver all of the technical and public policy. So within my division is audit, so setting technical standards and developing policy for audit and ethics. And I also sit on the Accountancy Professions Global Ethics Board, IESBA. We set UK GAAP for company reporting in the UK, and also set guidance that helps companies with their reporting, so strategic report guidance. We set technical actuarial standards, so work that governs how an actuary delivers their work in a number of different areas that are of particular public interest, and actuaries are really busy in pensions and insurance, but increasingly expanding into other areas, including data and also climate change. I mentioned corporate governance and stewardship. We also have our Financial Reporting Lab, which is a way of bringing together market participants to improve the quality of company reporting. And some of the issues we deal with are quite complex and challenging. And then I'm also responsible for our stakeholder engagement work in corporate affairs. So things like public affairs, comms, and how we go out there and invest and engage with investors and other stakeholders. So a pretty broad bunch of things. Before I joined the FRC, I worked in audit for 20 years. So I was at the National Audit Office.
Amazing. Yeah, thank you for sharing that. It's very helpful information to kind of show all the different activities that you've got going on. You mentioned a few different standards and guidances and projects there, but just to delve into them a little bit deeper, could you tell us a little bit more about the corporate governance and stewardship codes and, you know, some of the others that you mentioned? Because I think it'd be nice for our viewers to hear a bit more about those.
So in a sense, the FRC has been responsible for the corporate governance code and its development for more than 25 years. So basically, it's a code that sets out reporting requirements for the directors of a company to basically inform users of annual reports how the company is run and what it does. So, you know, how do the directors meet their obligations and duties? How does the board function? How do they deal with things like succession planning, diversity, and other issues? And you'll be aware, Amy, of the fact that we've got two sort of big areas of change at the moment. The first is the government has issued its proposals for the reform of audit and corporate governance in the UK. So we'll be looking to revise the corporate governance code to build in new requirements, for instance, like reporting on the effectiveness of internal control about financial reporting and risk management. But also we'll need to consider whether we need to make any changes to the code to reflect the very significant growth in ESG reporting and the use of different information. So that's something that's very much sort of front of mind at the moment. You also mentioned our stewardship code. We issued a new stewardship code recently, and we've been signing up asset managers and asset owners and service providers to that code if their reporting meets the standard. The code is very much focused on delivering stewardship outcomes, and therefore it is also a really important contributor to the ESG debate, because a lot of people who are investing, they want to know that their money is being used in let's say, in investments that meet a high sort of standard of ESG. And it's really good that the stewardship code is one way of supporting that. And those who sign up to the Stewardship Code report on how they do that to us on an annual basis. And we're able to make an evaluation of whether they continue to meet the requirements of the code. And of course, the code is underpinned by the FCA's listing rules as well.
So is this code optional, or do financial institutions have to follow it?
So in terms of the corporate governance code, if you're a listed company, so if you're on the stock exchange, you've got a premium listing, then you do use the code. The listing rules require you to, although the code does operate, the provisions of the code are on a comply or explain basis. So a good example would be, we've got certain time limits of how long a director can stay on a board. During the pandemic, it was really hard for companies to recruit people because, you weren't able to do face-to-face engagement. So some companies chose to extend the terms of directors beyond what the code would normally allow, but they explained it in their reporting. And so therefore they were being transparent and open to their shareholders. In terms of the Stewardship Code, it's a choice for people to sign up to it, but we know that it's seen as being a high standard in the marketplace. And it demonstrates that an asset owner or an asset manager has got in place good quality stewardship processes, and they're able to report on that and make a link between the work that they're doing and the stewardship outcomes they're delivering. So that's a really important piece.
Because you mentioned enforcement at the beginning, because I know you cover a lot of different areas and you've mentioned different codes and things, but which are the areas that you feel that the FRC has to kind of intervene and you don't see the asset managers complying where they ought to be?
Well, because they're choosing to sign up to the Stewardship Code, the sanction against an asset manager who doesn't meet the requirements is we can take away, that they can no longer be a signatory to the code. And of course, they are required to disclose their membership. So therefore, if an asset manager or asset owner loses their signatory status, then of course people may interpret that as an indication of poorer performance, and they may reconsider whether they want to invest. So it's not that we're going in and carrying out investigations in the same way that we do against auditors and accountants, but we are making an assessment to see whether they continue to meet the high standards of the Stewardship Code.
Interesting points there. And on that note then, so what are the mistakes that would kind of get them banned as members, or have those sanctions placed upon them?
So the Stewardship Code itself contains a series of provisions, and we require the signatories to report against those provisions. So what they might do in that report is they might fail to meet some of the provisions, so therefore they're ineligible for membership. Or what they might do is they might have a poor quality report that is not sufficiently transparent and clear about how they're delivering stewardship outcomes, and therefore that may impact on their status. But what we do is for every applicant to the code, we provide them with detailed feedback on where we thought their application was strong, where we thought their application was weak. If we accept them as a signatory to the code, it could contain recommendations about how they can improve their reporting and improve the activity that they do. If we haven't accepted them as a signatory, we can engage with them to say, well, these are the steps that you need to take to reach this high bar.
So if you had to give any advice to any members of an asset management firm, whether that's auditing, actuarial or accounting or other functions, are there any tips that you'd share with them?
Well, I think our experience has been, firstly, a focus on outcomes is really important. I know that asset management firms have, extensive policies and procedures governing how they work, but what users really want to understand is how do you take all of that to deliver high quality stewardship? So be open and transparent. And I think the other thing in reporting on how you deliver your stewardship, don't use boilerplate reporting. Really make sure you're tailoring it to what you've actually done. We don't want bland statements. We need to have, clear statements of what you're delivering, and we need you to evidence those. So that's what I would say. But the other thing, of course, is our stewardship team here is, you know, really focused on delivering the code and the work that we do in support of it. And we're always very interested to speak to stakeholders and people who are perhaps considering making an application to join the code. And one thing I would say is that the code is applicable to some of the biggest asset managers in the UK, but we equally have signatures from quite bespoke small fund managers who perhaps only have a handful of employees and a more limited amount of funds under management. But what that shows is that the stewardship focus is scalable and it's achievable whether you're a small player in the market or whether you're one of the biggest global ones.
Okay, so on that note then, do you only operate in the UK, and do you have kind of equivalent organisations that are in different countries in Europe and different jurisdictions that you collaborate with when you're thinking about reforming these and any updates?
Yeah, so there's an awful lot of international collaboration. It's different in a country by country basis. So in the UK, for instance, we have the FRC doing our work. We have the PRA looking at banks and insurers. We have the FCA looking at sort of wider players in the financial market, a lot more regulation. In the Netherlands, there's one regulator that does all three of those. So we engage with different people in different jurisdictions. For our corporate governance code and stewardship codes, quite often we find other jurisdictions looking to copy us. And that shows that, you know, we've developed something that is of a good quality and it meets the needs of our stakeholders. In the work that we do around standard setting and monitoring, we do work with other international regulators because quite often some of those standard setting initiatives are at the international level. And if we can get the right outcome internationally, we can minimise the changes we make in the UK and just build on the international work that's being done. And we play a very active part in that. So I'm the representative from the UK on the Global Ethics Board. One of my directors here in the office, she sits on the equivalent board that develops audit and assurance standards.
No, that's really helpful to know. Good to set the scene and understand that, as you say, in the UK is quite a different structure to perhaps the Netherlands and other countries. So taking a step back then, you did mention earlier that you've got your lab where a lot of the innovation takes place. Are there any kind of key initiatives or projects that you're working on at the moment?
So the lab has been really successful in delivering answers to some really difficult problems. So, you know, they did a really effective piece of work looking at directors' duties, Section 172 reporting. So we've thrown them a new challenge, which I think is possibly even more difficult and very relevant in the ESG space. And that is the term net zero gets bandied around a lot, but no two people really agree on what net zero is. And given that it's a term that's used so much in climate reporting, and, you know, you look at company reports and they say, you know, we have an ambition to reach net zero by 2040. What does that actually mean? So the lab team are doing a lot of work with stakeholders and with market participants to say, can we come up with a shared view as to what we mean by net zero? And therefore, as a result, it helps companies develop more consistent and comparable reporting. So if you as a user pick up 3 sets of company reports, you're able to actually understand how they benchmark against one another, rather than just saying, here's some information. How do I actually digest that? Is it actually preparing things in a consistent way? So this is a big piece of work for us. And we've got a lot of interest from stakeholders to participate in the working groups that we're running. And I really hope that that will be something that is a major contribution towards supporting effective climate reporting.
Absolutely. And it's interesting you mentioned that, because it's such a big debate, and we've got our TSAM ESG conference coming up on the 2nd of November, where we've got a dedicated panel discussion on net zero and what that means and what it looks like at a reporting level. So especially by then, I'm interested to see the developments in the discussion and see where we're at with that and get some other people's perspective on it too. So I'm afraid that's all we have time for today, but I'm sure that we'll have updates on the channel and at the event. So thank you so much for joining us.
No, you're very welcome, and I'll take my steer from you that I've got to tell the lab team they need to publish by the 1st of November, so we've got it for your conference.
Yes, absolutely do. Please do. Thank you, Mark.
Thanks, Amy.